Hello, ladies and gentlemen, and welcome to our monthly engagement of the pre-NFP webinar that helps us anticipate for today's non-farm payroll figures. My name is Stavros Tousios, and I'm the market specialist for FXPRIMUS. Just a little bit about myself. I have been involved in the financial industry for quite a few years. I have traded professionally for over a year and successfully for over 2-3 years, and also just decided to take this a step further by entering the Forex market as a specialist here in Cyprus. I did this, of course, because I like sharing knowledge. Sharing is caring, and I want all of you to have information that are not available to you sometimes, online, or maybe you don't even know what to look for. And I want you to feel free contacts, of course, to connect with me on Twitter, on LinkedIn, or even send me an email if you have any questions. Okay. Now a little bit about FXPRIMUS. FXPRIMUS is globally acclaimed for offering one of the fastest and most secure online trading environments available anywhere in the industry. Our extra measures in safety have positioned us at the forefront as runner in responsible trading, and we are now setting new standards in safety amongst our counterparts in Forex industry. The company enables clients of all experience to trade over 120 instruments, including currency pairs, commodities, CFDs, and also indices. FXPRIMUS sets the benchmark in safety for its industry leading safety mechanisms. We were the first to offer client-funded insurance coverage of up to 2.5 million euros per claim and offer third-party monitoring for client withdrawals by Boutica Client Trust. In FXPRIMUS, we're going the extra mile to offer you protection unseen anywhere else in the industry. And now, before we go ahead, of course, I would like to read our risk disclaimer. Please note that Forex trading and trading in other leveraged products involves a significant level of risk. It is not suitable for all investors. Trading financial instruments may result in losses as well as profits, and your losses can be greater than your initial invested capital. Before undertaking any such transactions, you should ensure that you fully understand the risks involved and seek independent advice if necessary. Any opinions, news, research, analysis, prices, or other information contained on this webinar or linked to from this webinar are provided as general market commentary and do not constitute investment advice. FXPRIMUS or its representative do not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information. Now, today's agenda will be the same as every month. Okay, so we will see again the general market tone, what is happening in the markets, so how the euro and the European and the US economies have performed, and how the dollar, of course, have performed. And have a look also on the next FOMC meeting. Not exactly have a look at the next FOMC meeting, but get the general feeling of what happened in the previous one and what may happen in the future. Okay, and when it would be probably appropriate for a Federal Reserve to raise interest rates once more this year. We'll look, of course, at the economist's expectations and if they are realistic or not compared to last month or compared to the averages. We'll look at the hourly earnings and also at the unemployment rate, which is at a 18 years low, a 3.8%. We'll look into the employment components from ISM and the manufacturing and ISM non-manufacturing, the ADP, the challenges report, and how the current market is actually positioned. Okay. We most likely are going to see on the charts low liquidity and squeezes in the Bollinger Bands, and this will be on the chart perspective. We can also check the bonds, the commodities, and equities markets, general view of all markets, okay, the inflation levels, and also the business activity as major key variables of an economy's health. Then they will go into the pros and the cons of a good and a bad NFP report. And of course, we'll close on the charts on how to position yourself. Okay, there will be no more slides for today again. So in case you have any questions, you can go ahead and ask. If I see it immediately, I will answer. If not, we'll go through them all at the end of this webinar. It's actually more preferable because we don't want to run out of time. Okay. So we can start by looking at the US and also the EU rates. Okay. Now, with federal funds rising to 2%, FOMC members reiterated the strong US economic outlook and also widened the spread between US and EU rates. Okay, so the European Central Bank stands at zero. Federal Reserve in June went from 1.75 to 2%. So as a result, sorting the euro dollar to earn interest is now even more profitable for carry traders. Okay, as the spread, as we said, it has moved in the dollar's favor. Euro, where is euro? Let's have a look on the euro. Euro is about, let's check. 120 pips weaker than it was on June 13th. But this is not only owed to the hike in US rates, of course, okay? It's also owed to the gentle approach of ECB to end quantitative easing and to keep rates at present levels, at least through summer 2018. 19, excuse me. The pair is bullish, actually, above 117.20. Which is where it currently trades, and will remain bullish as long as it trades above the bottom trend line of the bullish channel. Okay. 172, as we said, this is the sort of near-term resistance. Okay, and we want this to break to see a further up move. Anyhow, so we can now have a look at maybe inflation and the oil prices. Okay, let's get on to oil. I have DAX. Let's have a look on the oil. There we go. So oil, with oil prices increasing continuously, because we have had an continuing increase, cost push inflation also rises, and economic growth may come to a temporary slowdown until investors start repositioning themselves when the price becomes cheaper. Now, Fed's move to curb inflation by hiking rates, even 4 times this year, may be indeed justified, okay, because inflation is actually currently going, according to oil is falling, and oil always creates inflation. It's been justified. However, when it comes to surpassing the so long desired PCE target, which is the Fed's favorite inflation indicator, data shouldn't be ignored, as hikes don't seem actually to hold back on the oil prices. Okay, this is also Fed's concern. Okay, according to yesterday's minutes, we have the FOMC minutes yesterday. Although it was hawkish due to low unemployment, which pushes, of course, inflation higher, they are still concerned on trade policy and the US economy outlook. It is noteworthy that the rise in price pressures reported, they will not shift the Fed from its gradual path for interest rate hikes, as the policymakers have indicated they would not be too concerned with inflation overshooting its target, and they actually expected to do so anyway. Note that PCE hits a 2% on June 29, okay, which is a 6-year high, and 2 more hikes this year are appropriate until the end of this year. Now, as oil itself, oil, as I said just before, it plays a very direct role in growing and transporting food, for example, and in making gasoline. Thus, the cost of food and of commuting increases when the oil is higher, okay, which means fewer jobs as people cut back on discretionary expenditures. Now, in terms of inflation and wage growth, with wage figures rising to 0.3 last month, risk appetite was solid enough to take the dollar higher. Okay, as we see on this chart, go down on 4 hours, and it keeps actually this narrative going beyond amid the trade war concerns. Now, the fast-growing wages have supported and have also been justified in interest rates. Okay. However, the question of whether this month's guidance should drive US interest rates further remains valid, as trade war fears had businesses cutting back on hiring which may be seen in this month's report. Now, another point to look at is the equities markets. Okay, the trade war pretty much we have had recently. Okay, the recent U.S. plan to restrict Chinese investments in U.S. and the first investigation on up to $350 billion tariffs on Chinese auto inputs had U.S. stocks sliding over the past few days, not to mention the decline that we have had from over the past few weeks. Okay, while the dollar index was actually gradually rising. Okay, regardless, the first concerns over escalating trade tensions with China and EU, the NAFTA trade negotiations, and Mexican politics are likely to weigh in. Since equities performed poorly, confidence in the USD may falter near term. Okay, we also had the US imposed tariffs on Chinese imports this morning. Okay, but given the market's reaction, because we don't really see a lot of action today ahead of NFP, or we haven't seen anything since this morning pretty much. It looks like this is already priced in. Okay, now what I would like to do is what I do every time actually. I would like to go on the charts and have a look at our favorite pairs. Okay, first, of course, I would like to identify support and resistance levels for the euro dollar, which pretty much already identified there on the with the Fibonacci retracement. What else we can do is just draw another support line over here, which is the lowest, the most recent lowest low, and keep that in mind for the results. Okay, we have around 20 minutes for the results to come out. And of course, the other high is over here, which has already been, drawn by this Fibonacci. But we might as well just pull another line, because after this, I mean, above this, there is nothing really. You see, what we could do is draw a Fibonacci from bottom to top in order to identify a potential level on the top, which is right here, and it's too far away to consider for today's NFP. Okay. Now on the euro dollar, on the dollar yen, sorry, don't forget we looked at the US and the EU interest rates at the beginning. We said the spread has widened, and now the dollar is actually favoring the investors. Now, don't forget that with the banks, right? When we see the banks rise in interest rates and we see the spread widening, this is also a good indication to pick an actual pair to trade for the NFP. Okay, for example, euro dollar is a very good pair. Okay, but the best option would be, for example, to trade the highest interest rates with the lowest. Okay, so also dollar yen in this case is a very good option. Okay, with the recent Fed's rise, of course. Okay, but now these two also are the natural pairs to always trade. Okay, so let's go on the dollar yen now. Let's go a little bit closer. We can see those levels drawn from the Fibonacci retracement. We have pulled a few lines, and we can see those levels actually stand quite good. We don't need to draw anything else actually. I think we are pretty much okay. Maybe it would be a good idea just to draw a trend line down here, just in case we have a big dip, but I doubt it. Actually, it looks pretty far away, so I will just leave that out as well. What I can do though is draw another trend line from there to there. Okay, this is something more viable, and I'll keep this as a level, any level that you want to call it. Now, in terms of other pairs, we can have a look at how they move, but I will just actually close those and separate those two to be ready for the release. Now, technically speaking, Euro looks a little bit stronger today in general. Okay, over the past few hours, it has accelerated nearly 50 pips since this morning. Dollar again on the other side is trading mixed. So this is also something important to look at. Now, what I want to do to understand a little bit what's happening with the FOMC itself, with the Fed itself, I want to look at the previous results. Okay, the report came out from, there we go. The report came out 34K, better than expected, but we saw a downward revision. The revision is not really significant, to be honest. It's only 5K. I do think that this month expectations at 195 are realistic indeed, but I also expect that revisions again are in play, but not too big again. We may see a downward revision of a 10K scale, while the headline is probably going to be just below 20K. I think it will be actually quite a bit below. I have the feeling that this FOMC, this Fed, this NFP is going to be near 170 or 180K. And that is why I expect, that is the reason I expect a two-phase NFP. Okay, a two-phase NFP is trading the headline and then trading the wage and the unemployment rate, which is what happens actually every time. Okay, everybody always trades the headline first. Now, in terms of economists' expectations, okay, for this release, there were 78 estimates. The highest was 240. The lowest was 135. This is a standard deviation of plus minus 16K, which is actually the same as last month. Now, I consider these average earnings to be very important because I don't think that even a bad non-farm payroll numbers, even a bad number, it won't have much of an effect on the economy. Okay, only an effect on the short term actually. The average hourly earnings, it's likely to stick near 2.7%. Okay, year on year. But the question is if it's actually going to go there. The unemployment fell to a 16-year low, as I mentioned before, 18-year low, sorry, to 3.8, and it's most likely that it will remain at 3.8 because all economic indicators in the US at the moment are showing very good performance. Now, if the NFP is good, okay, the Fed will most likely rise rates in August's meeting. If there is a shortage in hiring, it's probably due to fiscal policies and the recent trade wars, and also taxed on the taxes on imported goods, as the businesses cut down on hiring. Of course, when they know that it will cost them more to buy any international products, items. I know that higher inflation is coming from oil, not so much from wage growth, okay, although wage growth has been supporting government and businesses. In terms of the interest rates probability, they remain between 1.75 to 2%, which is pretty much a 97.5% chance that they will remain unchanged. But this is the probability now, okay, actually yesterday. Until then, this number might change. Now, what else I want to do is I want to talk about some other components that they are very important for the NFP. Okay, the ISM manufacturing index rose. Okay, and the ISM non-manufacturing index also rose, but in both cases, the employment index decreased 0.3 and also 0.5% respectively in June. Okay, the jobless claims over here came out worse than expected yesterday, only by 6K, okay, and a tiny revision of 1K. The ADP came out worse than they expected, and lower than the previous one. And we also had a downward revision on the previous one. So we don't really look actually at the numbers on ADP. Okay, what we want to look mostly is the direction rather than the divergence between the previous or even the forecast. Okay. Now, I won't go into much detail. There is also other components we can look. Okay, you can look at the challenges report. And of course, just a few minutes before, we can also look at the reasoning for and against a good or bad NFP. Okay. Now, in terms of how the market is positioned, I would like, this is interesting. I would like to add the Bollinger Bands, because normally we would expect the Bollinger Bands to show us some squeeze, right? Okay, and we have it here. Let me just change this to some darker color and add this over here as well. Okay, so indeed we can see some squeezes because liquidity is low, supposed to be, at least in euro dollar it looks a little bit higher than normal. That might be, let's check. Best thing to do is just go and check the index. The dollar index is falling indeed. Okay, so it might be a pricing in that the headline is going to come out lower, but we never know. We'll see in a few minutes. So as I said before, euro dollar is dollar yen is always the purest pair to trade. Okay, but of course don't forget that the best method is to see the divergence in interest rates. Okay, another thing we can do in the same morning actually is to check the interest rates, the bonds markets. Okay, and as expected, indeed they are a little bit lower. Okay, so if the yields are up on the same day, they are pricing in for a poor NFP. Okay, but also we see that it's a very marginal measure. Okay, let's not forget that this report, this particular report, may be not as active as previous reports because we have had Independence Day, bank holiday in the US last Wednesday, and the truth is that the markets haven't really been able to catch up. Okay, they haven't been much active all week. We saw oil fell yesterday, and this could be a bad signal for employment, as when the inflation falls, hiring decelerates and unemployment increases. Generally, oil prices are high indeed right now because they reached a multi-year high, 4-year high. But on the short term, this small decline yesterday, just ahead of the NFP, it might be signaling a bad headline number for NFP. Okay, and that was a report from EIA, who have reported a small build in crude oil inventories. But no, this is a lagging indication. Okay, unemployment is normally what leads inflation. Now, in terms of reasoning, as I spoke to, the pros and the cons. Okay, what is good and what is bad in terms of indicators to consider for this NFP? So consumer sentiment is actually up. Okay, this is good. The job cuts report is good. The dollar index is a little bit down, as we have seen. This is actually not good, my fault. The Fed financial stress index is at a negative value, which means there is not much stress in terms of financial. Market conditions pretty much are less stressful. Now, the ISM and also non-manufacturing, then the manufacturing index, they printed better figures in June. But I also mentioned that the employment components of both were down, which is not good. Now, US investor sentiment, okay, is actually bearish. The unemployment claims were actually down, as we said before. The CB consumer confidence declined, but it was upward revised. And the ADP report was down, but near the previous result. So on that perspective, we have the score is pretty much equal, you know, on the indicators perspective. But I have a feeling that this is a time where we're going to see employment falling a little bit, hiring falling, because businesses started, you know, the tax cuts, the new tariffs, and all these fiscal policy changes by Trump have started reflecting onto the business activity and on hiring, of course, and this will be probably reflected on this month's report. Now, as I always say, I wouldn't look only at the headline numbers. Okay, the headline numbers is the phase one of the non-farm payroll. Okay, it's most likely we'll get a figure that is below this. At least this is my thinking, and I believe these two, unemployment and average hourly earnings, will remain the same. Okay, if that's the case, where we'll see a phase one where dollar will move lower and then it will move back higher, but be a little bit more consider the fact that the markets are not as active this month, so don't expect 40 and 50 pips moves. Okay, at least I'm not. Okay, as for you know, the prices we're looking at, you know, I mean, any divergence above 30k might be a good indication. That is, it could be a good opportunity, but anything below 30-40k, it means that we will expect whip shows and the market's just pretty much to go up and down. This is something that we're trying to avoid. Okay, now we can go a little bit closer and zoom in. I can draw just these lines here, level 1, level 2, just to make sure they are a bit more highlighted. Level 1, level 2, and on euro dollar on the top we also have this, actually, because it's a top of trend line, and on the bottom side also this, which is the bottom side. We already see what's happening with euro and dollar, unless if my okay, this is a little bit overreaction from big investors. Okay, it looks like it's priced in, as we said. So this is one of the reasons that it is very dangerous and risky to go and trade the NFP, especially when you have no experience. As I said, okay, the results are actually out. Okay, is it my laptop time is wrong? Okay, so this is very interesting. It came much better than actually about 30k better than expected. Average hourly earnings have actually indeed went down, and the unemployment rate went to 4%. Okay, this is a very big surprise actually. And this is the reason you see dollar falling and euro going up. Unemployment rate 0.2% up is very big. I do believe, of course, there will be revisions. It's just very hard to me to believe those numbers are not going to get changed. But the most important thing is to notice that these levels that we draw, okay, one level was here, the Fed, number one, number two. We did the same with the euro dollar. Number one, number two is exactly where markets are actually reversing, if they reverse. We may see a continuation of this downward move, or we may see a reverse and the markets will just carry on as with a directional bias they actually previously were catching on. I must say that euro dollar, yes, euro yen is a little bit weak, okay, because you can't really push the dollar much down. On the other side, euro is free moving. It's a free move towards 117.50. And it may be a scenario where this trend line breaks, but normally those I mean intraday basis and on Friday it may not happen actually. This is a very interesting report and very surprising report, mainly because the unemployment rate came out at 4, which means that businesses are still looking for the right people to hire. So it might be in a shortage of skill, which I suspect that might be the case. And because the 0.2 divergence is quite a number, knowing how good the U.S. economy is going. Now the average hourly earnings, it's okay, 0.2. I wouldn't expect it just to. It would be hard to hit the 0.3 again for a consistent basis. Okay, so there was forecast 0.2 before, and it should have remained the same. Now, of course, economists felt a little bit more confident for the US outlook and raised the wage expectations. There is a number of pairs we can check when we trade. Okay, we can just pop a different chart. We can pop up. Let's pop let's have a look on gold. Okay, gold is also having a hard time to go. It looks like safe havens pretty much are a little bit weak against the dollar. Okay, because both the yen and gold are safe havens. Now, I don't seem to understand why exactly this is the reason, because it should have been the opposite considering the trade war. But may be the case that this was already priced in for weeks back, and that is the reason that gold moved higher over the past few days, actually. We see euro moving higher, surpassing the levels that we have drawn. Guys, there is not much to talk about from this point forward. So if you have any questions, feel free to ask. Okay. Now, don't forget that. Oh wow, this is a very big move for euro against dollar. Okay, I had a view on the 117.50, but it looks like this is going to be heading to over 118. This is a very interesting development, and I wasn't expecting this to happen, especially after July 4, and especially after a week that has been a little bit quiet. Okay, on the dollar yen, I was expecting this level, yes, and maybe even lower. But euro is very, very, very impressing me. Now, as I was just to follow up on what I was saying, trading the NFP is very, very risky. Okay, and it's if you really, really, really want to position yourself, it may be a good idea that you wait for the markets to settle, wait for at least an hour and a half to pass, and you'll be able to get a better feeling and better understanding by looking at the candlesticks as to where the market is heading. Okay. Now, if you see the market in the next hour going up and you don't see any reversal signs, maybe a good idea to just not trade at all. If you see a reversal sign, maybe a dodgy candle here at the top, it could be a case where the markets are going to come back down, okay, and they would come back down, have to draw a Fibonacci retracement. They will probably come down to 61 or even lower to 78% of this previous candle. Okay, or we can take the whole move if you want from down here or from down here, which is the best scenario because this is the last leg. Okay. Any questions, please? We see a very decisive breakout here of the bands in both cases, but the euro yen was a little bit more mixed, I would say. But as I pay attention to the charts right now, I see a very interesting pattern here. Okay, and this pattern is interesting because normally we get price to actually shuffle between the 2 points. Let me get my pen, 1 second. This is called an opening wedge. Okay, and what happens normally is that we have this move. Okay, 1 second. Let me get the right one. Yep. We get this move. Okay, so potentially, and of course, it's not certain. It's never certain. We could see this developing as seen on here. Very interesting pattern, which is actually I was just able to confirm with this decline. Okay, we can clean our charts a little bit because they're a little bit messy. Take those out. Check that out. And that is a bit clearer now. Okay. Also, don't forget this. Okay, so we're coming from down there. I wouldn't be surprised if that was the case, but it may be not the case, and we may just have a break of this level. Okay, and price would come back down here, just below 110.4. On the euro dollar, it looks like it won't stop actually, and the next level will be 117.78, which I found to be impossible to reach today. But if you look at it, if you look at a different support level, resistance level, it's expected to be here actually. So it's not a strong level though, so keep that in mind. Guys, I don't see any questions. There is a few of you in here. I'm pretty sure you are particularly busy looking at how the market develops, but this is a chance for you to ask questions now before we close this for this month. Okay, so we have had an interesting development here. Employment change was revised upwards. I was expecting a revision, but on the 10K divergence, this is 21K higher, which is very good for the US employment. But if you see that employment employment rises, but the unemployment rate is falling, it means that the businesses cannot find skilled professionals, so they cannot really fill the positions they're looking for. Okay. I still don't see any questions. Please feel free to ask. The next 3 minutes, 5 minutes, I will be with you. Now moving over here, looking at the first leg from its full first leg. We'll have one level that is breaking right now, so we'll just ignore this. 1 second. If we just ignore this and this, and of course this, we see that finally that might be the chance of euro dollar to break above this ascending bullish channel. Keep an eye on the 30 minutes chart because we're moving on 30 minutes from 3:30 to 4. See where the hourly candle will close. It might be above this level, it might be below. Okay, so it might be a case where we'll see a full retracement or a break. And keep an eye also on what happens within the next hour if you want to play it safe, okay, in order to identify any opportunities. I don't see any, okay, I see one question. If the euro dollar is going to rise. Cello, I don't know if the euro is going to rise. And it's very hard for anyone to actually give you a confident answer. Okay, there is signs in the market that can tell you whether this is going to go higher up or not. For example, As you see, this is a strong level, okay, that seems to be bringing price lower, okay. It may be a case where this level is acting as a support and then euro dollar is moving higher, or it might be a case where this comes back in and remains within this channel. I have another question. Where do you see the USD in the future, since the US tariffs on China, US index has been going down? Will it have an effect on USD in long term or short term? Well, there is many things to consider when you're talking about US tariffs. Okay, of course they cannot have an immediate effect. Statements can have an immediate effect. The results of statements can have a longer term effect. Okay, now the thing with the tariffs is a little bit of a mixed situation at the moment, because the US tariffs imposed on other countries increase the confidence of consumer sentiment. Okay, consumer sentiment actually is rising with tariffs in the US. Okay, but at the same time, this is also creating a very big opportunity, or not opportunity, actually I would say it brings a disadvantage that of the trade war, of a global trade war, which of course is going to damage many economies, including the US itself. Okay, over the past few days, we saw President Trump announcing that he will impose tariffs also in the European Union. Okay, without knowing that this will going to cost to the US $13 billion. Knowing, I'm not sure if he's knowing, but all I'm saying is this is creating in the news, you know, a lot of tension, let's say. Okay, and also this is reflected in the markets. Now, how investors react is a different question, because some are of the you know, trading on the safe havens, and some of them are a bit more risk friendly, and they trade the dollar. Okay, so we'll have this to play around with. Now, I think within the next, by the end of the year, hopefully, or even in the next few months, we will see exactly what's happening. Now, don't forget that today 12:01 US time, which I think was 7 o'clock right here where we are in Cyprus, 7 o'clock in the morning, the US inaugurated tariffs on on Chinese imports. Okay, today, only today. Of course, we didn't see the markets move, and that is because everybody was waiting for their non-farm payrolls. Or it is a case where this was already priced in, it was expected, it was nothing that the market didn't know, because President Trump is you know, his tweets may be surprising, but his actions are not really. So everybody knows his character now and his personality, and they can expect anything from him. So I wouldn't be surprised if this move was already priced in. I hope that answers your question. Any more questions for anybody? I will give you a few more minutes. Interesting to see that we also had the Canadian report, of course, but nobody is looking at the Canadian. It's overshadowed massively by the US report. But at the end, you know, it's also funny to think that they also raised 2%, 2 basic points higher, the unemployment rate, and that the employment change also rose. I don't see any more questions, guys. So where do I expect euro dollar to finish today? Would be near 117.50, maybe lower as well. 117 to 100. This is a strong resistance. Where are you, James? James, this is a strong resistance. Okay, this is strong resistance. 117.2. We might see a break. We may not. But when we look at the markets from here now, we can pull our Fibonacci there. And we can also see that this is a 61.8 Fibonacci retracement on the down move. Okay, so which is again 117.2. So it would be, I mean, unless if the market is really going to turn up, okay, and go higher to 118 and 119, then I wouldn't think that this will be the case. Unless if we're going to see those levels, okay, coming back in and creating a some sort of long-term ranging market over here, for example. Okay, we could see something like this. The time will show us. Time will show us. James, is that clear? Selo and Osama. Guys, are there any more questions? You're welcome. You're welcome, James and Selo. I can see an invert head and shoulders. Let's have a look. Where is that? On euro dollar? On where? On in euro dollar inverse. Head and shoulder on which time frame? On which time frame, Mohammed? 1 hour. There is no inverse head and shoulders. No, I can't see a head and shoulders. If you're talking about this, I wouldn't call that this. Talking about this? No. Okay, so I doubt there other is what this one. You mean something like that can develop like this? Go backwards. Over here. This is okay. I'm Mohammed. I'm not sure which inverse head and shoulders you're talking about but I can't identify it. So if it's not a short term, which is what I'm looking right now, then I don't actually see an inverse head and shoulders. Maybe this 1, 2, 3, but no. Again, no. Okay, the one I showed earlier. Okay, this is in a move. It's not considered to be an inverse because it's in the middle of a move. Okay, so you can look at 15 minutes for intraday trading, maybe yes, but when you look at head and shoulders, inverse or non-inverse in general, it's better if you expect for price to reach a new fresh high or a fresh low. Okay, and also look at this with the divergence on the RSI. Okay, so just to give you an example quickly, if that was to develop as a head and shoulders, that would be this. Okay, and you would be you have a, let me change the color, you would have a divergence here, and that should have a divergence here and on the MACD. Okay, then you would have this move down here. Okay, and if price wasn't able to surpass this level, over here, then it could be an inverse. It could be a head and shoulders, and will probably come down further. Okay, another question. Who's next? Yes. So Juan is weaker. Juan, yes, should be weaker because that will have a great impact on actually it depends. If you look at it at the business perspective, it's normally businesses that are affected because they are the ones who export. Okay, so they will definitely be harder for them to export. But in general, it should have an effect, yes. So and we see, well, not much of a move. We had this top recently, which is a top that is interesting. It's a retest of this level. So we don't. This is the next to on Chinese Juan to look. 6.7 is your level. Look for wait for this break. Okay. And we are euro dollar. Okay. So next question. Yeah, no problem, Mohammed. You're welcome. There is 4 more minutes left to end this webinar, so I can take another question or a couple if they're short. Okay, I don't see any questions, so I think I'm going to close this off. Okay, there's one coming. JPY pairs are buy or sell based on the results. Sell, the results are mixed. Okay, these NFP results are mixed. The headline number is better. The hourly earnings are worse. The unemployment rate is worse. For me, this is, of course, these are mixed in terms of what came out positive and what came out negative, right? But this is a negative report for the US. It's a bad report for the US. Okay. The good thing is that we had a positive revision of the previous one as well, which shows that previous month was actually much better than what economists had anticipated. Okay, and they had to revise upwards. Does it make sense, Salo? Is this what you're asking? Okay, good. Yeah. Now, in terms of the trade war, this is a completely different scenario. Okay, it has no impact on this particular trade at the moment. We're talking about monetarily opening, positioning yourself, very, very short term. Okay, this is not a long-term indicator. Okay, NFP. It is, of course, it shows you the economic outlook and activity of the US, but this is not something to be considered for longer term. You're welcome, Salah. Okay, at this point, I would like to thank you for watching. If you have any questions, as I always say, please don't forget that you can always send me an email. Okay, if you remember the question, or if you are seeing this this recording on YouTube, feel free to email me if you have any questions related to NFP or trading. Okay, I would like to thank you once again for watching, for being with us today, and I look forward to seeing you again next week. Thank you very much. Have a nice weekend.